Hello traders, welcome to Wednesday the 27th of January 2015 economic calendar update. The market is quite bare in terms of economic data for tonight's European session. The market will focus on the Fed's policy statement coming up in 11 hours time. So between now and then we could see some further profit taking as we've seen in yesterday's session on the US dollar, and momentum could continue to very slowly flow in that direction. What's happening is the market is taking profit ahead of this decision as they are worried that the Fed will delay its interest rate hike. They're worried that they're going to delay the policy and as they put out in mid-December. Purely due to the fact that the ECB has issued a large quantitative easing program, oil is low, and they're just worried that that the Fed may be a little bit shaken by this. I don't believe that that's the case. I believe that they will maintain their current guidance and their current stance as put in mid-December, that this policy statement and meeting doesn't have a press conference, and it isn't a larger meeting typically of where they will issue a policy statement change. So having said all that, I believe that the US dollar will come back into favour, and we could see the moves that over the last two trading sessions actually be reversed and people moving back into the US dollar. So we'll keep an eye on that, keep an eye on the statement, and we'll look for some trading opportunities in a future video on that basis. Only an hour after that, we have the New Zealand rate decision. That's expected to remain on hold as well. However, everybody is focused once again on the statement. The New Zealand economy has benefited from the oil prices being lower and dairy prices stabilising, and obviously the currency falling. The commodity currencies have fallen on the back of the Canadian surprise interest rate easing or interest rate cut, and we've seen that across the board, and that instilled in everybody's mind worry that all commodity currencies will see an interest rate cut. The Australian economy is heavily expected to cut interest rates this year. However, the relief rally in the Australian dollar seen earlier today was on the back of some stronger CPI numbers, which is alleviating a little bit of expectation of the RBA requiring to cut next Tuesday. So back to the New Zealand, we don't expect them to alter their stance back to a more neutral stance from a hawkish bias. But should they do move to a neutral stance, we will see some further selling in the New Zealand dollar. If they maintain their stance, we could see the US dollar continue to be seeing some support, especially after the large falls seen of late. So keep an eye on those two statements. That's what the market's focusing on, and I'll come back to you with a video on potential trading opportunities.